Sanibulisa abafundi baka-Mathematics grade 12. Siyaqhubeka namhlanje uThixo uDlamini with i-cash flow. Today sizobona ukuthi how to calculate buyback of share as well as use of the fixed asset. Nje we'll be focusing lapha ezansi towards the end of the flow statement. Okay. Asiqale-ke. We said last time, cash flow is all about FIO, right? Cash flow from operating activity, cash flow from investing activity, cash flow from financing activity. So we focus here today on the cash flow from investing activity and cash flow from financing activity, right? So we do have, this is the cash, this is the cash flow. This is the cash flow statement. Cash flow statement is part of paper 1, right? It goes with the ratios as well as note number 7, note number 80, ordinary share capital and the retained income. We focus here to it's here this week. Last week we were more focusing on cash flow from operating activity. So we do have a cash flow from, so cash flow from investing activity, from investing. Cash flow from investing activity, as well as the cash flow from financing. Cash flow from financing activity. Lapha cash flow from investing activity. We are basically talking about purchase of the fixed asset. Purchase means to buy of the fixed assets. So what's the formula here? We said we have to say current fixed asset in the balance sheet. We're going to take the fixed asset for the current year. Current year fixed assets amount plus depreciation plus disposal. Given all this, depreciation is coming from the income statement, disposal will be in the information when we're selling the asset. Yes, last year fixed asset amount. So you'll be getting this figure here. So this figure will be brackets because remember in cash flow grade 12, we are checking the inflow of cash and the outflow of cash. If imali yaphuma, we put it in brackets. If imali yangena, it's an inflow, a positive. Then from here, grade 12, let's check manje ini. Let's check the asset disposal. Proceeds of asset disposal. Proceeds of asset. The same one at the plus asset disposal. This figure will be positive, right? And then also I check where there was an increase or decrease. In investment or fixed deposit. In investment or fixed deposit. So let's say our fixed deposit is increasing. Let's say our fixed deposit is increasing in this case, so which means the figure is an outflow, which means we are taking money to go and invest, and we are not sure, we're not 100% sure that we can get money back. So that's why. But if the fixed deposit was decreasing, so which means the figure would be positive. Then the result here, we assume that the figure of the fixed asset is greater, so you get that figure there. On top of the cash flow from investing activity. Now we are looking at this one, the one that is the main one. Cash flow from financing activity. How do you finance? Right? Proceeds of issue of shares. Proceeds of issue of shares. Right, this figure you take from note number 7, or in the information, the issue of shares during the year, right? I repeat, you take this figure from note number 7, or the number of shares that were issued during the year. So it's positive. You are issuing the shares, in return you get the money. So the figure will be always positive. And then after this one is buyback. Buyback of shares. Buyback of shares, right? Or we can say repurchase of shares. So you're going to put the number here, the number of shares. Remember, in number is the same, either note number 7, note number 8, or cash flow. You times by the purchase price here, or issued price. Purchase price or issued price. Right, you get the figure. Always the figure of the buyback be in brackets. And then you are checking either increase or in a non-current liability. So increase. So now we have increase or decrease in non-current liability. Right. So the figure come here. Let's say in this case, we have an increase in non-current liability. If it's an increase, the figure is positive. If it's a decrease, which means we are paying equally, we are paying a loan, so the figure must be in brackets. So now you are done. This, you get your figures there on top. Assume that your figure is positive. Remember, also you already calculated your O there, so maybe you have the figure here. If you add all these 3 figures, they must be equal to the net change, cash and cash equivalent, right? The net change, like ezansi. Okay, so the focus here today now is to calculate buyback on note number 7, ordinary share capital, as well as note number 8 in the cash flow. Okay. So, okay, let me put the paper like this. This is note number 7, right? Note number 7. This is ordinary share capital. Ordinary share capital. Right, ordinary share capital. So here we have authorized shares. Authorized shares. So basically, these are the shares that are available for the financial year. Right. So we give in the number of shares that are authorized. And then we have issued. Right. This question, they can ask this question in 3 ways. Right. So we have number of shares issued at the beginning, ordinary share issued at beginning of year, right? And then we have ordinary share issued during the year. During the year, right? And then we have buyback of shares. Right, we have now buyback of shares. Remember here, we are using the average for note number 7. So here it's average. Okay, I'll explain about average price. Right, you charge by average price, you get the figure there of the buyback. Right, now you are adding this plus this minus the buyback number, get this one. So we are saying this one plus this minus, you get now the end. That is an ordinary share, ordinary share issued at the end of year. So we are told grade 12. That's how you calculate, right? That's how you calculate in it. Note number 7. Okay. Then go to note number 8. How to calculate, I mean, how the impact of the Bible on note number 8. Note number 8, we call it retained income. Right, balance at the beginning of year. Right, net profit after tax. Sometimes you'll be given before tax, you must calculate it after tax, or you'll be taking this from the income statement. If here on the same question there was income statement, and then buyback of shares. Buyback of shares. Buyback of shares. Here, I mean, we have to times it by above average. Above average price. Above the average price, you get your results here. You put it in brackets again. Always when there's buyback, you put the figure in brackets. And then you are having dividends. Dividends, right? We have interim, or we call it paid. We have final, the finale, final or declared or recommended. Can use all the term now, right? So what you must do is this: write the figure here, write the figure here. Okay, I'll show you next time when we are doing the real question how to calculate all these figures, but now I'm just showing you a principle. Okay, then now you repeat this one now at the end. So now we have balance at the end. Balance at the end of year. Right, that's how basically you have to do with note number 7 and 8. And then there is a buyback. Now, okay, let's go calculation of the buyback. Calculation of the buyback. Buyback of shares. Right, so we said we have note number 7, ordinary share capital, plus note number 8, retained income, is equal to the cash flow. Formula yethu le yethu sodwa le formula le yethu. So note number 7, this is ordinary share capital. Note number 8, this is retained income. Then I normally say this thing, it's the same as A plus B equal to C. This is the equation that we are proving here, grade 12. Information bazonginikeza either A, right? So which means if it's on A, that is an average. Remember, on note number 7, you are using an average. Average. Then if it would be above average, then ubona ngani ukuthi if uC, that is the cash flow, uC, it can be purchased. If information kubhala ukuthi purchased, you know ukuthi uC, purchase price, or bought, or issued, or maybe EFT, any method of payment, you know. Okay, so normally you are given information C, right? And then we have to calculate either above the average or the average. Let me go back to note number 7. Right, this is note number 7. Let's say maybe here on this information, we are given information from the top, right? How to calculate the average in this information. Remember, we said note number 7, it's an average. Then how to calculate the average here? You take the first two. And there was no story that was, you take the first two. Take here, take these two figures, divide by these two figures. Right? You are taking here your figures. Therefore, you get the figure here of the average. It's already, let's say maybe you were given the issued price. Now we have to say this one, which means the purchase price, sorry. You are saying now the purchase price or the issued price minus the ordinary share capital, that is the average, is equal to the retained price. So if now we are adding, you'll be getting this figure. Right. So that's how basically you'll be given your note number 7. Let's say maybe, because let's say maybe in this case you were working downwards. Sometimes it might happen that maybe there's no figure of the ordinary share capital at the beginning, right? So you can't calculate, like that. So then how are we going to calculate? If something like you're having insufficient information like from the top, grade 12. So what are we going to do? You take this one. So it's already, you'll be given the end. You take your ordinary share capital at the end, divide by the number, divide by this. So we're going to say this one, divide by this, right? You get what? Average price. So there's the one that you're going to put it here. That'll be your average price, right? If you are taking le figure divide by le figure, then you get the average price. So once you get the average price, so which means you already have a, it's already, then either you'll be given this or this one. So let's say maybe you are given the issued price, bought, purchased. Then you can get this one by saying the bought one or the purchased one less, you get now your average, like I was saying before. Okay, so that's another alternative. I want to also show how they also ask note number 8 in a different way, because there are 3 ways that they can ask note number, so not 8 but 7. So this one is the first one. Then the second one, quickly, I'm still on note number 7, but focusing on the issued part, right? Okay, everything is the same. This is ordinary share capital. So we still have authorized shares, right? So we're having the figure there, right? So we have the issued, right? So sometimes what they normally do, they will give you like this, grade 12. Information. We have the number of shares issued at the beginning. Ordinary share issued at the beginning of year. And then immediately there's a buyback here. There's buyback. You can see here, it's a beginning of the year, during the year, buyback. Here, immediately there's buyback. So now we have buyback of shares. Buyback of shares. Right? Remember, if buyback of shares, note number 7, we are using what? Average price. Then now we are saying average. We are times by average. You know now how to get the average, right? As I was showing you earlier on. So you get the figure. The figure must be always in brackets, right? And then they issue after a buyback. So there's a number of shares. Ordinary share issued at the, during the year. Okay, during the year, you'll be given everything here. So yes, this one minus this plus this to get the under, the figure here at the end. So another amount, ordinary share issued at the end of year. Here is during the year. You get your figure here, end of the year. Right. This is how sometimes they can ask note number 7. So let's say maybe we have to calculate an average based on this question now. Average in terms of buyback for note number 7. Then how are we going to calculate? You will take only the first figure, divide by this. Unlike here, you are taking the first two. You can see here we're going to take only this one, right? We're going to take only this one. Then the last one, another method of buyback, if maybe you are given note number 7 in a different format or in a different way. Okay, quickly. So this is another note number 7, ordinary share capital, right? Authorized share. I'm born now authorized shares and figure. These are the shares that are available. City issued, right? No issued way to this is one is the number of shares issued at the beginning. So ordinary share issued at the beginning of the year. So get the figure there. And then remember here we're saying immediately there's a buyback. Now immediately there's buyback again. Buyback of shares. Right, remember we are using at average price, and I already show you how to get the average price. So we get we are getting the figure. Okay, we are getting the figure here, and then there's no issue during the year. You see here we're issuing even after a buyback. Okay, on the previous one we're issuing after a buyback. There will be no issuing after a buyback. So it's just the end. These only two figures. Beginning minus the figure of the buyback, you get the end. So now our end is here. Ordinary share issued at the end of the year. So here depend the question, in which format. It comes in different shapes and forms. Then to calculate the average price. If information ikhona eqaleni uzala qala udivide ngala. If information ayikho lapha phezulu ila ezansi, you're going to take only this one, the end, divide by the end amount. Amount here, it's a number here. You get your average depending. Nala futhi it's the same story. If information ayikho uza egcineni. Nakule eqale ngayo, if information ayikho, to get the average uza futhi egcineni uthole ifigure yakho ye average price for the buyback, right? So once usuyitholile ke It's obvious you'll be given in the information either A or B, as I already said, right? A or B or C. So which means if you C, you are sitting on the purchase price or bought or issued or EFT, right? Or that is the cash flow. And then for UB, you are having a retained income, right? For UA, you are having the average price. So that's basically ilokuzana i-calculation of i-buyback. Quickly, before maybe isikhathi sethu siphele, I want to go back quickly la siqale khona lapha ku-cash flow akade besiyenza for today, right? Ngikuza la quickly. Let's come here quickly. You can come across also in auditing a question that can say, there's a question that they like to ask on the cash flow, but on the cash flow, what are the fundamental decisions that can be taken by the management? Okay, I repeat the question. On the cash flow, what are the fundamental decisions that can be taken by the management? Right? Remember, une cash generated from operations, une interest paid, une dividends paid, une taxation paid. Awubheki na ubheka lapho. Naka ama-decisions that are fundamentally, which means iziphi izizathu ezinqala ezingathathwa umphathi based on the cash flow. Nansi eyokuqala, purchase of the fixed asset. Okay, maybe they will say, state the reason, figures and the benefits or the advantages. Purchase of the fixed asset, then you write the figure of the fixed asset, that is 2 marks, right? Proceeds on sale of the asset disposal, you write also the figure, right? Maybe like increase or maybe can be decrease on investment, you also even write the figure, right? And you come also here, proceeds of issue of shares, you write also the figure yako here. Buyback of shares, you write also the figure. It can be increase or decrease in non-current liability, you also write, maybe it can be a loan, you also even write your figure. Therefore, you write also ama benefits parallel to that, or either ama advantages, right? Or the solution. For instance, what can be the reason if you purchase the fixed asset, right? There are many reasons, right? To increase the fixed assets, right? That can be another reason. For proceeds on sale of an asset, more capital outlay, so there'll be more money that will be coming to the business. Increase or decrease in investment, also nakona in the long run, we'll be having a dividend, or we'll be having the interest if we are investing, depending whether it was a decrease or increase. Issue or proceeds of issue of shares. So we're issuing the shares with the name of getting the money. It's also more capital outlay then. Buyback of shares, right? If we are buying back of the shares, in the long run, we can have more dividends, right? And yeah, we can have more dividends. And then increase or decrease in the non-current liability, right? In the long run, you can pay less interest or cannot have any debts because you are paying whatever that you are owing. That is basically another question that you can get on the cash flow. So what we're going to do now, next time when you come back, I'll be showing you AMA ratios, because AMA ratios, they go hand in hand with this question of e-cash flow, right? They go together. So we'll be looking at the ratios, just to give you AMA tips, how to write fast, how to master the ratios and ace everything, right? So thank you, grade 12. What you have to do now is to practice, 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 and more practice. Thank you. Have a good day.